Hello, I am King Solomon from Climate Finance Initiative Program of Climate Friendlies TV. Welcome. The future of today is Madam Mele Kyari'S Nnpc Limited, mirroring ARAMCO models, grow profits, cut cross-subsidies, optimize balance sheet, align with Paris, and meet stakeholders' expectations. It was a memorable day of January 7, 2022. President Muhammadu Buhari inaugurated 10-man board of directors chaired by Senator Margaret Okadibu of newly incorporated Nnpc Limited under the Petroleum Industry Act of 2021 with policy marching order mandate to them to focus on profitability, be mindful of our net zero carbon aspiration, and to ensure total alignment with the global energy transition realities. This mandate charges and charts the Nnpc Limited in transformation and conversion costs as state-owned integrated energy company incorporated in Nigeria and operating in global private sector market to source funding capital, manage operating assets, undertake capital expenditure, expand revenues, earn incomes, pay taxes and dividends, as well as moral suasion to discharge its corporate responsibility to economy, job creation, environment, and society. Leading the transformation charge to Nnpc Limited is Madam Mele Kyari, a geologist and 30-year career lifer at Nigerian National Petroleum Corporation (NNPC), who was appointed by President Muhammadu Buhari in July 2019 as the 19th Group Managing Director from the position of Group General Manager, Crude Oil Marketing Division. Madam Kyari has since set an aggressive insider reformist agenda with the publication of the audited financial statements of Nnpc Group and its major subsidiaries for the years 2018, 2019, and 2020. This is an unprecedented feat, the living memory of Nnpc corporate history. In addition, illuminating data of monthly, quarterly, half-yearly, and annual reports and updates are now available for downloads on its corporate website. However, what Nnpc audited financial statement revealed was solid performance of declining revenues, accumulated losses, trade channel stuffing, which its auditors qualified as adverse to Nnpc's ability to continue operating as going concern. As of December 2019, the group recorded net loss of 1.8 trillion naira. Its current liabilities exceeded current assets by 4.4 trillion naira, and accumulated losses reached 1.5 trillion naira. However, in 2020, by some magic wand, the group recorded profit before tax of 719 billion naira, though its gross profit was dismal and declined to 64 billion naira from 714 billion naira in 1999. This unprecedented profit performance was achieved through clawing back some Federation accounts receivables of 267.6 billion naira and crude stock variation of 250 billion naira by another financial engineering and FGN funding of 530 billion naira offset the accumulated loss deficit. Prior to the incorporation of ARAMCO as joint stock company in 2018, this Saudi government-owned largest oil and gas corporation in the world was reputed and rated as reasonably well-managed company. The Saudi government has insulated ARAMCO from bloated bureaucratic structures to ensure its professional management. The ARAMCO board and management maintain and sustain professionalism, working procedures, and the international oil company efficiency culture. However, the plan for initial public offering (IPO) to raise $100 billion from listings on stock exchanges in London, New York, Hong Kong at $2 trillion valuation fell flat because of global institutional investors and asset managers concerned on issues relating to climate change, political, legal, valuation, oil price volatility, stranded assets, and corporate transparency risk factors. In January 2020, $1 billion, a record, at $1.7 trillion valuation, through sales of 1.5% of its equity value to Saudi high net worth individuals, institutional investors, and the Gulf regional investors on the Saudi Kingdom Tadawul Exchange, with added sweeteners to investors of annual dividend payment of $75 billion till 2024. In the same vein, Aramco issued and raised $12 billion and $8 billion of senior unsecured notes in 2019 and 2020 respectively, both listed on the London Stock Exchange. In June 2020, Aramco expended $69 billion for 70% equity stake acquisition of SABIC, constituting part of the use of proceeds of the listed public offering. Interim report. On the back of average crude oil price of $72.8 per barrel, an average production lifting cost of $3, Aramco achieved revenues of $281 billion, net income of $77.6 billion, free cash flow of $69.5 billion, total borrowings of $112.5 billion, capital expenditure of $23.2 billion, income taxes and zakat of $67 billion, dividend paid of $56.2 billion, shareholders' equity of $328.3 billion, and total asset size of $563.3 billion. As part of its escalated global fundraising strategy, Aramco attracted $12.4 billion by selling a 49% interest in its oil pipeline subsidiary to investor consortium led by EIG Global Energy Partners, and $6 billion in debut Sukuk issue. Aramco's unique asset monetization, cash flow generation, and value creation turbo engines are sustained by its low cost and low carbon intensity crude oil and natural gas production, driven by a skilled workforce, innovative technology, and highly motivated management team. In contrasting capital structure, NNPC has no borrowing on its book because the funding arrangement for its exploration, development, and production are principally by way of joint venture (JV) and production sharing contract (PSC), which is that are operators of upstream producing oil fields. The capital expenditure contribution of NNPC to the JV PSC arrangements are by way of federal government budget appropriations. Under the agreement, NNPC on behalf of the government is entitled to between 20% and 60% of the profits in crude lifting, which are then sold by NNPC to finance other operations without commercial borrowing or recourse to debt capital market. Another NNPC or balance sheet fundraising tool is the third-party external financing arrangement, where NNPC secured financing against forward sales agreement (FSA) of crude oil production. It has, along with some JV PSC partners, subsisting 12-year duration project FSA for amount of $2.4 billion signed with Nigeria LNG Company on advance call payment against future oil delivery. In addition, it has $1 billion deals with Eagle Export Funding Limited, a special purpose vehicle of UBA-led loan syndication, and recently $5 billion loan package with Africa Export-Import Bank, Afro-Exim Bank, under the same FSA arrangement. NNPC would need $20 billion annually in the next 10 years, up to 2030, in long-term debt and equity capital for funding the transition to clean energy export, decarbonized crude oil, natural gas, refined products, and suppliers' value chain, renewable energy grid feedstock, as well as decommissioning of aging carbon-intensive operations infrastructure. Madam Mele Kyari and the new board of directors carry the aspirations and hope of the nation for a secured and prosperous future. The pathways will include accelerated, deep-rooted overhaul of NNPC operational, financial, and governance structure, to institute high level of global disclosure, transparency, and reporting standards, commitment to climate and sustainability key performance metrics, and superior productivity and financial return delivery that will attract, retain, and increase interest of global institutional investors, asset managers, and strategic investors to engender sustained flow of structured capital to NNPC Limited. With oil price approaching $100 per barrel, this is the opportune timing for NNPC to mirror and leapfrog ARAMCO. Thank you for watching and listening. I'm King Solomon from the Climate Finance Initiative Program of Climate Friendly TV. God bless.